Hello traders, hello everyone. Welcome to another trading week. It's Monday, April 8th. Hope everyone is doing fine. So just let me know if everything is okay, please. Can you see my screen? Okay, so we will start in a second. Okay, let's wait a few more seconds. Okay, so what's happening? As you know, jobs data on Friday from the US was strong. Yields moved higher as few FOMC members about potential no rate cuts actually, so rate cuts could be delayed, which somehow makes sense if economy is still doing fine, right? Why would you help economy if jobs are still doing fine, if everything is okay? Because then you will just risk that inflation will tick even higher. So that's probably the main theme of from the last week. What has been very interesting is that despite these strong jobs, we have seen we have seen stocks market stabilizing and now turning to the upside. Okay, and the dollar index is trying to find some sellers, and everything is happening ahead of inflation data this week. It will be released on Wednesday. Okay, not only that, we have the ECB, Bank of Canada, New Zealand rate decision, and also FOMC meeting minutes. When maybe we will not get anything new from the latest meeting, but still closely will be monitored actually the inflation data. Of course, the expectations are interesting, higher, 3.4%. The previous reading was 3.2%. So dollar, I think that till we get some actions from central banks and not just stocks. Okay, just a second. You cannot see my charts. Someone's saying, okay. Okay, now it's fine, I believe. So I think that dollar for now, obviously, as you can see on your charts, it's still somehow sideways, and I'm afraid that this maybe could continue until we see some real actions from central banks. So firstly, we'll have maybe speculations that maybe Fed will, after all, cut if inflation this week will come to the downside. But then and dollar could drop. But then you will have the ECB that could be dovish on Thursday, and the euro will drop. So you could see these moves between very important, very big levels on plenty of dollar pairs. So unfortunately, I do not see any kind of a real trending environment on dollar pairs at this stage. But something is clear, as I said, because the stocks bounced. Okay, stocks bounced on, here I have actually this chart. Okay, because stocks bounced on Friday despite strong jobs data, I think that this is obvious that market want to stay in this somehow risk on environment, because if stocks didn't see much of drop now, when some Fed members said that they could potentially delay the cuts and market still stabilize after this jobs data, then I really think that uptrend here for stocks is still in the cards. Okay, so looking at the S&P 500, I have two potential wave counts that I'm tracking. The first one could be, let's say that I speculate this a little bit longer in time and regarding the price developments, but I just want to give you examples of how I can, with different wave counts, look at the same direction in the near term. Okay, so here we have pre-wave drop, okay, which could be part of a higher degree wave B correction or wave 4 correction if I consider the daily charts, where I will be expecting at some point higher degree retracement. So I came out with one idea that this could be maybe part of higher degree flat correction. Okay, don't pay attention too much to wave B or wave A labelings, because this can be also big wave 3 and wave 4. Okay, so that's not really important at the moment. The important is that was the free wave drop, and that even if the higher degree structure will be irregular, you still should see minimum free wave recovery close to the previous highs. Okay, so even if that would be a temporary recovery for a wave B that belongs to flat correction, or maybe something else, something more complex, you still need to see minimum 3 waves up. So even if I'm saying that maybe at some point this higher degree correction will still come back to this 5,150 area, that's still very possible, but firstly we have to see a completion of a 3 wave rise, right? So that's the first interpretation. The second interpretation is that maybe this drop that recently unfolded has been just wave 4, and we are headed higher to new highs straight from here. So even this one obviously is bullish wave count, but much more aggressive compared to the previous one. So in both cases, I think that we have a chance that S&P 500 will continue to the upside, because after all we have the higher highs, higher swing lows, so there is no reason to fight this trend since you have pullback in 3 waves. The only question is if this is already a completed 3 wave pullback for this correction that we are seeing, and we are headed impulsively back to new highs, or is this going to be part of a complex correction? But in either case, in the short term, I think that there can be more upside. Also, if you look at dollar index, what's happening here? Well, we are still trapped in this very big mid-range. Okay, so what's really interesting is that we moved beyond these February levels and reversed and fell back into this range. So obviously this range, this sideways price action, will stay in the game for slightly longer term. And if that's the case, maybe there will be some retracement to the lower side of this 102.36 to 105 range. Okay, and that's obviously then still possible to see a triangle at some point, or maybe something else. But in the short term, I think that there is a chance that dollar could see a little bit of more weakness, maybe still ahead of the inflation data that will be released on Wednesday, or maybe after the inflation data, or maybe the ECB will be a trigger. So we will see how this will unfold, but this certainly looks like a failure top up here. Short term, I'm speaking short term, okay? And that we could stay sideways here with chance to retest slightly lower prices, okay? Looking at the bigger picture here, a daily chart actually, still the ideal resistance would be around 106, okay? Not sure if we will make and see this level retested, but still the longer term picture for me is bearish on the US dollar. That 106, if we get there, that would be even better level for potential drop. Okay, so bigger picture still bearish, short-term picture sideways to bearish. Okay, definitely not bullish. And as I said, also the S&P 500 has made 3 waves setback as well. So if we see more upside there, well, then you know that dollar could potentially drop. Looking at the US yields, still they are rising, and it's quite interesting to see US yields trading to the upside, right? While you have dollar lagging a bit. So I'm just wondering what may happen if maybe US yields will turn to the downside after inflation data, inflation report. Who knows? Then I'm afraid the dollar could see a much more aggressive sell-off than we think. Okay, but looking at the poor technical and Elliott wave structure here, we had a very nice impulsive recovery on treasuries, and then you have a 7 swing correction now coming into this very nice potential support zone. So I'm observing the potential levels for a bounce. Of course, to make sure that this correction is finished, you have to see a break of or beyond the previous or latest swing high, which is clearly here, that goes to end of March. Okay, so for now there's still a downtrending market, but I'm seeing prices moving into potential support. Okay, because there will, if we get, or we will see sooner or later really that Fed will approach towards potential cuts, then again this sentiment will be visible and will change on those markets. Okay, because obviously market is always trading on what may happen in the upcoming months, what Fed may do in the upcoming meetings. So if June potential cuts are going to be delayed, well, that's the reason why these notes futures on treasuries are trading to the downside. Looking at bund market, also in a deep correction here, I believe. Potentially this can be some kind of a running triangle on the way down, so watch out for potential more short-term weakness maybe, and then the price could stabilize, but I still think that this has been a bottom here, and that we are just trading sideways before market may potentially turn back to bullish mode, let's say later this year. Okay, if we do not see any kind of a real actions taken by central banks, well, then maybe these markets will just stay sideways still until really something changes. Okay, but I think that if this will not be ahead of summer, before summer, then maybe we will see some actions after the summer, of course. Looking at the euro dollar, so euro dollar, actually I posted this one on Twitter recently. As I said so many times, when one big central banks like Fed is going to turn hawkish, dovish, whatever, sooner or later other central banks will try to follow the same pattern. Okay, and if that is really the case, then you will firstly see maybe dollar turning to the downside on dovish Fed, then you will see euro and pound and other currencies turning to the downside with a delay, when other central bankers from those regions will actually show up and make new decisions. Okay, so still this is what makes this market very volatile on both sides, and if I zoom this out, you can clearly see that this is a very sideways price action. We haven't seen any real trending environment, real directions for the last year and a half. So I just think that we will potentially stay sideways here for a slightly longer period, but the big picture is clear. Okay, you can clearly see that that was a very strong move to the upside from that 2022 lows, and now we are just trading sideways. Okay, so I think that this represents an impulse, and this current environment represents the correction. So sooner or later, of course, I'm expecting a break to the upside, but it's not really clear if this will happen already in a few weeks, or maybe will this potential breakout will potentially be delayed. So it's very maybe useful and important to watch out and observe price action when you have such a range, to observe the price action on a smaller time frame, because maybe there you will have some clearer patterns. And what has been going on last week, well, we have seen some very nice bounce here from the lower side of this range. Okay, and this looks like an impulse. So despite very strong jobs data, okay, on Friday we have seen dollar coming to the upside, euro obviously dropped here, but still after the jobs data were released, that was just temporary reaction, the market stabilized here. Okay, so I'm thinking that if dollar could not rally, okay, into the Friday close, I just after this jobs data, I just think that potentially we will see more sideways or even higher price action here. Okay, so I'm looking for 109 potential to be a very interesting resistance, because after all, keep in mind that I'm tracking a very big triangle here. It's a bearish one, because here move from the lows has been in 3 waves. That was a WXY correction, and now you are maybe forming another 3-wave rise. So 109 is very interesting potential resistance here for the euro this week, and I don't believe that we'll see any kind of real strong moves or breakouts here out of this very big range ahead of ECB this Thursday. Okay, even if you will get some very nice moves on Wednesday when we have this inflation report from the US, this market could still then stabilize and even reverse when the ECB will show up. Okay, because on Wednesday, obviously, market will be trading the euro-dollar pair based on the expectations what Fed may do. But then this sentiment, this focus will shift towards the ECB, what ECB may do on the next meetings. Okay, so this will definitely be very interesting and volatile week for the euro-dollar. I'm sorry for this messages here, sessions disconnected. Obviously, I have another computer back at home still logged in to this trading view. So here, looking at cable, I think that for this year it's a bullish pattern. Okay, we have not only that we have these 5 waves up from September of 2023 lows, we also had the previous one very big 5 waves up from 2022 lows. So that's definitely a very clear bullish structure. So I will be expecting more upside after the correction. Now we have seen some very nice pullback to this first support, not really touched it yet, but so far we are seeing some intraday rallies that could potentially extend even further, since we can see potentially more weakness on dollar index, as I showed you earlier. But even if that would be some kind of a just temporary recovery, 1 to 750, 1 to 720 is maybe potential resistance for this week. If we can break this higher, then maybe even more upside can be in the cards. But overall, I'm bullish on cable. Even if we see some break of 125, I still think that the lower prices could stabilize real quick here around 1 to, or let's say around 61.8%. Okay, I'm still very bullish. Let's say for the next few months here on cable. Now let's take a look on Kiwi. So Kiwi, not sure if we'll see anything new, any surprises here. So maybe short term it's a little bit more tricky situation, but longer term it's very clear here. Okay, we have a very nice and strong clear impulse away from these 2022 lows, then very deep pullback, okay, which clearly looks corrective. Okay, and then you have another impulse. So what is the most important for Kiwi, or why I'm holding potential bullish interpretation here? Because that was an impulse, then we have a correction, and that was another impulse. Okay, and now we have another drop in 3 waves. So that's probably something, the best what you can get whenever you want to maybe to identify the next potential probabilities regarding this. Just a second. I forgot to put my phone on mute. Sorry about that. Okay, so that's probably the best potential wave structure that you can get to help you identify the next direction on this pair. Okay, because as I said, impulses are showing us direction of a higher degree trends, or direction in which the market should resume after the 3 wave retracements, and that clearly occurred from that highs and from that lower highs. So I'm expecting more upside in the short term. As I said, maybe it's not really clear if wave C has already ended here, because if you look closely here, okay, it's not really clear if that wave C already bottomed, or are we going to see another retest of the 78.6%. So maybe it's, if you want to be long here and you will try to join with potential short-term setups, then definitely it's very important to wait a little bit longer. If you look closely here, that was the previous swing low, okay, retested here, and now it acted as a resistance. So making a bullish bet from here with small stops, well, it's a little bit dangerous zone. I definitely recommend to wait on a daily close above this swing level here of, that's the level, let me check, is 60.40, 38, around there. So you definitely want to see a daily close well beyond that price to make sure that the market is turning around. If we see an overlap with this potential sub-wave one of C, okay, that would be here. If you see this overlap, then obviously that would be a very, very bullish interpretation. But that's how to navigate the short-term structures, okay? If you zoom out a little bit, or maybe you don't care about the intraday flows, this is the most important picture. That's the invalidation level, and that's the support that we recently tested. So sooner or later more upside could be seen. Okay, but of course for members we are always tracking, observing the intraday price action as well, because if we have some higher degree 5-wave rise here from potential support, then we will know that bottom has already formed. Now let's take a look on dollar yen. So dollar yen, as you know, has seen some very nice bounce, okay, from last week, and this occurred, maybe it has something to do with US yields. Obviously, as you can see, US yields moved to the upside, okay. So dollar yen is trying to follow the same pattern. It's not always tick by tick reaction, because you have other important factors that will drive dollar yen, especially Bank of Japan. And as you know, so far historically still there was a very nice and good correlation. And if you look closely, you can clearly see that both markets made similar reversals when they resumed higher. But if you look here now closely, you can potentially see that we are already trading in a fifth wave. Okay, so what that means? Well, it means that this lag from March lows can come to an end. And let's not forget that higher we go in price on dollar yen, there will be greater chances that Bank of Japan will potentially intervene, or there can be only speculations that this will happen, or maybe some talks, whatever. But still, any kind of a news about the intervention at the new highs could potentially trigger the new reversal in the markets. So I'm looking for 152.50 to 153 as a potential completion of this current cycle, and then just be aware that there can be reversal whenever the market is slow like this one. Okay, maybe even Bank of Japan will not be that loud regarding potential interventions, because somehow they see this as a stable environment if the market is moving from one side to another and not making any kind of big volatile moves. But let's say that market suddenly breaks sharply to the upside, okay, even above 153 in a very short period of time, then that's the different story. Then of course Bank of Japan could very fast be back in the wars, and you will see potential comments that will try to limit the upside here for dollar yen. So I'm definitely looking for a final fifth wave here, and will be expecting a reversal here, maybe already this month. Now let's take a look also on gold. So gold, bigger picture, we have seen a pretty nice and extended strong moves. So the wedge that I have been tracking here as one potential wave count for the last few months is obviously maybe not completely invalidated yet, but looks like that for now it's better to stick with this wave count, which is much more aggressive and more bullish. But still, you are potentially at a 261.8% extension. So in the short term, watch out for potential some kind of a pullbacks, but on the longer term, or let's say for the next few months, I just think that after any kind of a pullback or sideways price action, we will see even more upside. And if the US yields would come to the downside, okay, this metal market, which is already very strong, will be even stronger because of the weak US dollar. Okay, and even if the inflation comes significantly higher, and then they will not cut, metals can still do well because of inflation hedge. Okay, now if you take a look also, and then you have this Middle East risk as well that is putting this market in bullish mode. Also, if you look at silver has finally made a very nice, impressive break to the upside. And I think, as we discussed already last time, I just think that silver has much more upside potential. If you look at gold-silver ratio, you will see that this one turned to the downside last week. So maybe now it's silver turn, and maybe we will see this 30 in matter of days, weeks here that will be taken out. But whenever that happens, well, keep in mind that 32 up to 34, 35, that's the projection or resistance area that we are observing, okay? And we've been calling for this move for a while. It's just maybe the short term, it's a little bit tough to find the entry at this current stage. You just have to wait on a pullbacks, okay? If you're more like a short-term trader. If you're longer term and already positioned, then of course this doesn't really matter for you much. But overall, I just think that whenever next pullback occurs, I think that there will be a new opportunity. Very nice support, if we see a dip, would be around 26 to 26.30. That would be the first area to watch for potential bounce and maybe rejoin the trend here. But up here, definitely it's very risky, very late for potential new short-term longs, but definitely not structure that you want to be short, okay? That's definitely the structure that you want to be looking for potential longs within uptrend, okay? Just let me remind you, if you're first time visitor here, please press a like, leave us a commentary if you will watch this recording a little bit later, subscribe to our YouTube channel, and make sure to put notifications on so that you will know when we are releasing some new stuff here on YouTube. Okay, now let's take a look also here. Well, I forgot to mention this one. I forgot to put it on my notes. So here is actually silver. We are looking at the COT data positioning. So whenever these large speculators, okay, are, which by the way is in green, whenever large speculators are in some extremes, well, that's potentially saying us that we are approaching some significant areas where maybe bull run could potentially slow down. But if you look closely here, we are still not anywhere near to extreme levels, okay? I'm looking this 5, 6, 7 years back, and you can clearly see that there is still plenty of room for this positioning to increase from large speculators, and this obviously could be the case in the upcoming weeks, especially when we finally start breaking these 30 levels, okay? So I still think that there is room for more upside, despite very nice rise over the last few weeks. Still, we are not seeing any kind of extreme readings, and this just tells me that there can be room for further upside in silver. Now, let's take a look on cryptocurrencies. Firstly, here we are looking at exchange inflows, okay? And as we discussed last time, whenever you see price coming to the downside, okay, and then suddenly at some point you have increase, okay, in one day of these inflows from private wallets to exchanges, then it means that some of investors are afraid that prices will move even lower and they want to sell their bitcoins, okay? And this usually represents the extreme of pessimism, okay, in a bear market, or optimism in an uptrending market. So for now, what we have seen is some very nice response to the upside that happened here in mid-March, and then we also had some increase of inflows last week, and you can see that market is now turning to the upside, while these inflows obviously are dropping because no one is concerned about potential lower prices, okay? So everyone wants to hold Bitcoin. So you have to be very careful and observe the price action. What may potentially happen when we break to new all-time highs on Bitcoin? Will there be some new extremes, like maybe extremes in outflows, okay? Because whenever price will break to new all-time high, well, some will think that, well, we missed potential opportunities on cryptocurrencies. I want to hold Bitcoin now, and then of course a lot of transfers will happen out from exchanges to private wallets, because they will think, okay, that's now for real, Bitcoin goes to 100,000. And if we'll see some extreme readings here, okay, of outflows whenever Bitcoin breaks to new all-time highs, well, that should be very important indication that maybe that's not really going to happen. Okay, that maybe there can be some pullbacks because there will be just too much of optimism around there. So we will definitely observe this very closely whenever Bitcoin is even higher, which so far is making some very nice moves. But watch out also this maybe these levels, Bitcoin liquidation heat map, you can see that just recently, okay, there was liquidations of 1.7 billions. Okay, so obviously some huge stops were taken out here from short, and this could potentially maybe cause some new intraday flows. Let's see if we can break above that level, then I think that this bull run could be for real. But if not, and if we drop, let's say, back below or back towards 70,000, then this sideways price action will just stay in the game. Okay, but it's good for cryptos in general now that when we have seen this push to the upside, that there's still some time left till we have the inflation report on Wednesday. Okay, and maybe that there will be no other real potential movers that could maybe change the flows of Bitcoin short term only. Okay, what we have seen recently is still Bitcoin sometimes is very connected to this news. It really depends the response of the US dollar, sometimes not. Okay, it really is about the surprise or expectations of the news that we are tracking. Now, if we look at the Bitcoin here, so we could either complete this potential triangle here around that goes to 65 or let's say 66,000. Okay, because we are obviously breaking some key levels. But as I said, just maybe wait a little bit longer before saying that this breakout is for real. Okay, because short term, I'm speaking short term. Longer term, definitely for the next few weeks, I think that we will be higher. But just now, maybe there will be some new setbacks, because if you have, whenever you have just few hours of a potential very strong moves, well, on cryptocurrencies, as you know, they can be very volatile. 2, 3, 5% can happen in an hour, so that's maybe not really a confirmed breakout. It's totally different story if you wait 1-2 days, okay, and you see stable price action in a bull run. Let's say that market will just stay around these levels, around 72, 73 for the next 2 days, then I think that we will continue higher. But if at the end of the day we are back close to 70,000, then clearly this would not be seen as a real breakout. Maybe there can be an even deeper, more complex way forward still. Okay, so just keep an eye on these developments here. The short-term levels that are really important here. Okay, I would say 69,300. Okay, if you drop below that level, then more complex way forward can certainly happen. Okay. Now let's take a look also on this one. Why I'm saying that maybe you should be very careful when trying to call the breakout, because obviously Bitcoin is turning to the upside. Crypto total market cap also can be headed higher, but what if we exclude Bitcoin? Okay, what we are seeing here, well, the price is still not breaking this 1.2 trillion. So in my opinion, there's still potentially to see this wave E pullback. And if we see this retracement, well, that means that the whole crypto market may be still not really breaking out yet. That's why I'm saying that maybe it's good to wait a little bit longer, maybe watch out this total market cap before that excludes Bitcoin, before you can really be certain that we are breaking out. But as I said, that's maybe more important for the short-term swings. For the midterm, I think the direction is very clear. We either go higher from here or from lower prices. Okay, that I just think that more upside on cryptocurrencies will eventually show up. Okay, now if we also take a look on nvidia here, this one, where it is, okay. So nvidia, you can see market just opened 5 minutes ago, the cash market. So you can see here that we are still potentially in a wave for consolidation. So I think that would be much easier for cryptocurrencies to make a really strong break to the upside whenever this nvidia is also going to see a new reversal higher. I still think that there is a chance for wave C to retest maybe some levels here around 80.30 is the first support, some minor gap here. That goes back to start of the March, and then you have lower prices around 1750. But this whole area is certainly very interesting. I'm just wondering if wave C can pass the wave A termination point before this market really turns higher. But whenever that's happening, whenever that's going to be the case, I just think that Bitcoin will be even higher. Okay, traders, I hope that you enjoyed this presentation. Please make sure to visit us at wavetraders.com, and we have plenty of premium services, as you know, and we are updating those markets on a daily basis. Okay, so make sure to check this out and talk to you soon. Traders, enjoy. Bye.